This is why I'm selling everything just to buy these 10 stocks. The first stock is from the robotics sector and it's called Dio Technologies. They are recently expanding their business to the data center market so they can profit from the AI spend. And the positive thing is you can already see that in their numbers but not in their valuation. So first of all, they have a price to sales ratio of only 4.6, but at the same time they're growing their revenues 140%. And they're expecting an EPS growth of 41%. And all this is creating a bullish forecast from analysts with an average price surge of 90% and in bullish cases 115%. So the three main business segments of this company are first of all their data center buildouts. They recently built their 5th data center, and their second big revenue stream comes from security and inspection systems, which is integrated with AI software, which is creating recurrent revenue because of its maintenance and their software licensing. And their third business is in the energy sector, where they will be deploying and operating power generation assets for other companies. And I would definitely start your position sooner than later. And the next stock is called Mara Holdings. And I will keep it short because this one is just a straight up buy. Literally the only 3 things that I have to show you are these 3 stats and then you will have it in your portfolio. But first, the only thing I ask from you is to smash the like button. I will do the research for you guys to discover the best stocks in the stock market. And in return, I just want you to like the video. And only subscribe if you want to stay updated to the best stocks that I can find you. Alright, so the PE of this company is 13. Keep that in mind. This company is already profitable. They are expecting that their revenue will grow 100% and their EPS 200%. Now somebody please explain why this stock isn't trading at a PE ratio of 100. It looks like analysts are also pretty bullish on this stock, but I truly believe that it could exceed even the bullish scenario. They are one of the biggest Bitcoin miners out there, but most of their potential is sitting in their data center business. This next stock is truly a banger of a company and it's called AMD. So AMD has a ton of potential the upcoming 3 years. That's first of all because of the MI350 GPUs that just started to roll out. That one will start to get a lot of demand from the data center side of the business. Furthermore, they have the best possible customers in the world and they're starting and increasingly deploying AMD systems in their data centers. So analysts expect that the data center side of the business will grow to 13 billion in 2028. And that is a double up from what they're making right now without counting the other businesses AMD has. But I truly think analysts are underestimating the growth potential of AMD. And don't forget, they have a beast of a CEO right now, which is Lisa Su. And on top of that, they have the MI400 in production, which will be ramping up next year. And they said it will have a 30x performance compared to the MI350s. So yeah, AMD has a very bullish story and is still a buy after the recent stock price surge. The next stock is a LiDAR technology company and it's called Innoviz Technologies. For the people that don't know what LiDAR is, it's used for real-time 3D imaging for autonomous systems. And they're making these very efficient LiDAR sensors for mass production. It's all super interesting what they're doing, but is it working in their business model? I can tell you one thing, it definitely is. They're trading at the price to sales ratio of 10. Analysts have a mixed opinion, but on average, they think the stock price will go up 20%. And that shows they still have to wake up to this stock. But this company is expected to grow their earnings per share 40% and their revenue 200%, which is absolutely insane, especially now that it's trading only with a price to sales ratio of 10. If we go over the earnings chart, you can see that the EPS is going the right direction. And yeah, the revenues are also just going up and to the right. This company is already selling its LiDAR systems to BMW, which is already in the market and is called the 7 series, if you want to search it up. And the new Innoviz Smart line targets security, robotics, aerial and traffic intelligence, which is a huge opportunity for this company. And their biggest opportunity is with the Volkswagen robotaxis. That could absolutely be massive for this company. And it's forecasted that these robotaxis of Volkswagen will start their first commercial launch in the 3rd quarter of 2026. So it's much sooner than expected and could 10x this company very fast. The next stock is called RedWire. And this company is an unstoppable growth machine. They are expecting an earnings per share growth of 60%, which is already massive. And they're forecasting a revenue growth rate of 100%. While this company is trading at a price to sales ratio of 2.7. Furthermore, our analyst is projecting a 25% to a 250% increase in the stock price. Then you might ask yourself, there must be something wrong. They must be in massive debt. Well, that's luckily not the case because they have $170 million in cash that they can burn if they want to. And that's exactly what they're doing. They are not profitable yet, so that's the one negative point. But analysts are forecasting that early 2027 this company will become profitable. And then Wall Street will suddenly love this stock. And this company was previously only focused on being a space infrastructure supplier, but it's now transitioning into space defense, which opens a lot of contract opportunities with the government. Now what's so bullish about this company is that with its recent acquisition, and now with Trump, who is very interested in space, especially now that they're in a kind of cold war with China, that will increase the demand from governments for advanced space defense systems. And all this positions this company to generate accelerating revenue growth. The next stock is called Celsius, and Celsius really tanked the last few years, but since they bought the Elani company, which is an energy drink company, their revenues are skyrocketing again. This acquisition was very much needed and at the perfect time. The next stock is a data center company, and it's called Iren Energy. I bought most of my shares between $5 and $8, but now the stock price surged a ton and the company is now trading at $45, which is still a fair price because this company will be growing a lot because they're mining Bitcoin, and with that revenue they're reinvesting it into building data centers. And this is working out extremely well for them because they're growing their revenues 350%, which is even higher than Mara Holdings, which was the second stock in this video. But the PE ratio of this company is also a lot higher. Compared to Mara trading at a PE ratio of 15, Iren is trading at a PE ratio of 117. But to be fair, the price to sales ratios are much closer. So definitely a great company to own. Next up we got QXO. This company is a big play on the housing market. If you believe that houses in the US will start to move again, then you got to own this stock. And especially now that we're expecting rate cuts, which is very bullish for the housing market. Because this company is becoming the biggest player in selling construction materials and providing construction workers. And this is why their bullish case makes sense. They made a powerful acquisition of Beacon Roofing Supply for $10.6 billion, which is a massive growth stimulator for the company. And analysts are recommending that this stock is a strong buy with an average price target of $32, going from making around $10 million every quarter to almost $2 billion. The next company is called Microbot Medical. This company is generating zero revenue, but next quarter this will change. And this will change dramatically to the point where they will make $14 million in the second quarter of 2026. But what is the focus of this company? Well, it's robotic and micro-robotic technologies for minimally invasive surgery. The funny thing is that right now you can't calculate the price to sales ratio because they aren't generating any money. But their 1 year forward price to sales ratio is 2, which is still extremely cheap, so this company is a must buy. Now the upcoming stock is called Harrow, and they're expected to accelerate their growth and improve profitability in the upcoming years. They are particularly focused on generic and innovative eye care treatments, and they recently demonstrated a 30% revenue growth rate, which is driven by increased product adaptation, and they will benefit from the high demand of aging population. Furthermore, analysts got a bullish outlook with on average a price increase of 60%, and they are also expecting that the revenue will grow from 300 million in 2025 to 600 million in 2028. That means that their revenue will double in less than 3 years, while they're trading with a price to sales ratio of 6.4, which is absolutely nothing compared to their expected growth. My 10th stock is pinned in the comment section, and I want to get to know what your guys' number 1 stock is. I will do research on it, and if it's actually a banger, you will see it in the next video.